Hello, welcome back. This is Seewing and I'm coming to you with continuing breaking news around the mortgage industry and homeowners having equity and why all these issues are pretty challenging in today's housing market. Again, welcome back. And I'm going to use several sources. Today is Thursday, May the 25th. I'm going to go over two metrics today. I'm going to go over the Mortgage News Daily, and pretty disappointing to hear that today's fixed mortgage rate is 7.03%, a 0.02 basis percent higher than yesterday. And yeah, it's a psychological barrier. Anytime a mortgage rate hits 7% or above, or anytime a mortgage rate hit at 6% or below, I believe is a really psychological and emotional scars. People react much more unfavorably, especially the buyers these days, but not for sellers, really, if you think about it. But let's go over the data, the mortgage data a little bit. As you can see, at the past week, according to Mortgage News Daily, again, people with good credit can qualify for about 7.03%, or people with bad credit, not the FICO scores, which is a lot lower. Hey, not only you need to qualify with a higher mortgage rate, therefore the mortgage payments could be higher. Therefore, it will impact someone's qualification again. So essentially, it will create more people who will not qualify to buy a house with a higher mortgage payment. So it'll continue to be a way 40-year home affordability issue exasperate even more than it already has for the past year. But as you can see, there are three organizations that report this daily mortgage news. We have the Freddie Mac, we have the Mortgage Banking Association, and we have the Mortgage News Daily. The Mortgage News Daily I follow mostly. So as you can see, during the past week, May 17th, the mortgage rate was 6.7%, and then continued to go higher. 6.7, 6.82, 6.9, 3.95. So steadily has gone up around 0.33% basis point in this past week. So if you compare to the boom, housing boom year over year, last May 28, 2022, the mortgage rate were 5.29%. So at that time, May of 2022, at 5.29 mortgage rate, there were a lot of housing activities, a lot of multiple offer situations, a lot of bidding war. We're talking 10, 20% above bidding war. But as we move into the second half of 2022, you will see the mortgage rate will steady rise from 5.29 in May 22nd, 2022, all the way around October 2022, when the mortgage rate were around 7.3%. But I'm going to go there next for moving forward. You're going to see a year-to-year comparison, which is more apple-to-apple comparison, because today's mortgage rate is higher than 7%. And we do a year-by-year comparison as we move forward into August, September, and October 2023. We compare to August, September, October 2022. You will see the mortgage rate is somewhat very similar. So we have a realistic apple-to-apple comparison on the housing market results as we go there. But for right now, the disparity between last May and this May, 2023 to 2022, we have seen a 1.74% increase in a mortgage rate year over year, May 24th. All right. Also, let me go over this past year's mortgage rate according to Mortgage News Daily for people who have good credit. As you can see, for the past few weeks, the mortgage rate were down here at 6.5%. And back in May of 11, which is a couple of weeks ago, now has shot all the way up to 7.03% for people with good credit. And so I foresee the mortgage applications going to decrease in the next few weeks, and we're going to report that. I'm going to go over the Mortgage Banker Association's mortgage application decrease in the next few weeks on another video. But suffice to say, the volatility of the mortgage rates are pretty daunting, if you will. And prior to May the 11th, we have looked at the peak of it. May the 8th, we have seen 6.68% interest rate. And then we have seen all the way down Actually, over here, let's go over here. Around April the 6th of this year, the mortgage rate were 6.18%. And I'm trying to find that there's a 5.99% mortgage rate occur somewhere over here in the range of April, like a month and a half ago. When everybody saw the 5.99% mortgage rate, another psychological barrier. Anytime you see anything below 6%, people in a housing frenzy, buying frenzy, and all that begins to occur. But the 5.99% was very short lived. Only happened for the following few days. Then the mortgage rate since early part of April have went over 6% and hovering the mid sixes for the past April and for the past a month and a half now, unfortunately, all the way to 7%. Yep. And also back in March of this year, the mortgage rate were 7.10 according to the mortgage news daily. March the 2nd this year has been the highest, 7.10. Right now it's 7.03, as you can see right here. Right now it's not the highest mortgage rate. It was back in March the 2nd with the highest mortgage rate. Let me see what else I can find here. Here's the 5.99% back in February the 2nd, 2023. We find the lowest mortgage rate for this year at 5.99%. But then you see that then from 5.99, line show skyrocketed all the way up to 6.45% in only a matter of days. So, yeah, is disappointing to say the least. But I'm going to share with you another statistics, which is it could be very critical over here. I'm going to go over the two key housing themes. We are seeing low inventory and few distressed sales. Without further ado, let's go over this. And the first paragraph shows that in every housing cycle is different. One of the key themes in this cycle is that existing home inventory right now, May 25th, 2023, historically extreme low. The whole inventory is at historically extreme low, as many homeowners are, quote, locked in, end quote, for their current home with low historic mortgage rates. So here are the current outstanding mortgage rates are low. And here's some data from FHFA, which is a national mortgage database showing the distributed interest rate on closed-end fixed rate 1 to 4 family mortgages outstanding at the end of each quarter since quarter 2013 to quarter 22. As you can see, in 2013, there were not as much equity as there is right now. You see the trend from 2013 to 2014. So in the past 10 years, we have seen the mortgage and the equity going pretty steadily, going up, because the mortgage rate prior to the pandemic were in the mid fives, if you will, until, as you can see right here, until the pandemic occurred in 2020. And then the Federal Reserve decreased the mortgage rate to around 3% in the middle of 2020 and then 2021 and the first half of 2022. We have seen massive increases in home prices and people refinancing, people getting historically low equity. As you can see, the category of people that have massive equity have accumulated to an unhistorical level. People having low mortgage rate and high equity, you can see, all right? And this graph shows, hold on, let me highlight. This graph shows the recent surge in the percent of loans under 3%, okay? As you can see, the blue line shows the surge of people with locked in at amazing 3%. And then also show the people that have, as you can see, the light blue shows that the individuals, mortgage holders, homeowners that have 3 to 4%, which is right here, has risen dramatically also. And then you have the gray line showing people with mortgages of 4 to 5%, which is in this match gap right here, and then 5 to 6%, which is right here, and people with 6%. So most people have mortgages of less than 5%. We're talking like percent of the mortgage holders have mortgages of less than 5%. And now you know why we are seeing historically low inventory. Why when you have 5%, 4%, 3% fixed rate mortgage, this is a gold mine. This is the asset you're protecting. Why would you move up to buy a higher priced home sell your home with a mortgage rate this low and have to buy a house with a 7% mortgage rate, you're thereby doubling your mortgage payment. Now, that's why we're seeing the current homeowners right now, they are dictating the housing market. I say it again, the current mortgage holders that have refinanced, that have purchased their home back in 2021 or 3 to 4% or even lower mortgage rate with a massive amount of equity. Why? There's no motivation whatsoever for them to sell their home right now and to deal with the 7% mortgage rate. That is absolutely insane. So that the homeowners are controlling the housing market. That is a narrative that they are sitting. In fact, I can say this, homeowners with low mortgages are sitting on a gold mine. As a matter of fact, that could be my theme. That could be my headline for this video. Homeowners are sitting in a gold mine and they're not letting go of their mortgages. Potentially, if the mortgage rate does not decrease substantially to motivate them to sell their homes in the next year or beyond, we're going to continue to see low mortgage rates, historically low supply of inventory, and the pent-up demand still are pretty high, believe it or not, even though we are facing elevated mortgage rate as of today. So there are still more buyers than sellers, and home prices all over the country. We are seeing a little bit of a bidding war and multiple offer situations. So for anybody to say right now we can see a housing crash, that's not happening. Look, this is an economics 101, where pent-up demand, where demand is higher than supply, housing prices will go up. And that is what we are seeing all over the country, especially homes that are under the median price in their respective local market. Does it make sense? All right, just want to make this very important point. So let's go over this graph once again. This graph shows that the recent surge in the percent of loans under 3% and under 4%, starting in early 2020 when the pandemic occurred, when the Federal Reserve had a lower mortgage rate into the 3% mortgage rate mark, and as mortgages rates declined sharply during the pandemic, okay, the percentage of outstanding loans under 4% peaked in first quarter of 2022, of course, at 65% loan to value, and the percent under 5% at 85%. These low existing mortgage rates make it difficult for homeowners to sell their homes and buy a new home, since their monthly payments would increase sharply. Of course, I just said that. This is the key reason existing home inventory levels are very historically low. All right. And the percentage of loans under 6% in quarter 2022, which is April, May of 2022, is at 7.1%. And it has increased slightly to 8.2% ratio. Now let's go over there will be few distress sales. That means foreclosure is at a 50% below normal foreclosure year, 50 below normal. So for anybody say that foreclosure is going to ramp up, it's going to be a high, it is factually wrong. There are very few foreclosures. There are very, very few distress sales because of the reason we just discussed on this video: low supply of inventory and higher demand scenario. Okay, continue with this. Let's go over the distress sale situation. And here it is. As you can see, right here, most homeowners have substantial equity. Note, this does not include homes without mortgages. By the way, do you know there are 40% of American homeowners nationwide that do not have any mortgages? Their houses are free and clear. They are on an amazing situation at a very good comfort level. So they have a lot of equity. They have a lot of wealth in their homes, and they are going to keep it, not going anywhere physically or financially. Let's get back to this graph right here. Most homeowners have, like I said, substantial equity, and currently 62.7% of homeowners have loans with less than 6% LTV, loan to value ratio. You know what I mean by 60%, right? Of their loan is 60%, and the equity is at 40%. Does it make sense? As you can see, 80%, 60% people have 40% equity. And then the light blue, 61 to 70% of this category people have equity. And then so forth and so on. As you can see, right? Pretty clear cut graph. A substantial amount of mortgage holders have lots of equity. So they are not moving unless the mortgage rate will come all the way down. And then finally, the mortgage origination by credit scores. This graph pretty much indicates that people who own homes, people that have a lot of equity in their homes, they have very good credit. So unlike the 2008 financial and economic crisis, recession, and the housing bust, which is not happening today, is a completely different market. This graph pretty much showed during the housing bubble, like I said, 2008, 15 years ago, there were a large number of loans to individuals with low credit scores, and many had little or no equity and were underwater as house prices declined. As we move forward to today, in 2020 to 2022, most borrowers, whether purchasing or refinancing, had excellent credit score and substantial equity. So there will be very few distressed sales in this housing cycle. Again, the theme is low existing home inventory levels and few distressed sales have been good news for home buyers. So home buyers are entering the market to try to offset the low resale inventory in the current marketplace. So remains to be seen. So let me go over this graph once again. As you can see, people with high credit score above 700. We're talking in this graph. The majority of homeowners, as you can see, have FICO score higher than 719, 720. You see that? See, this is amazing. So I don't see any distress. When there are no distress, when there are high levels of equity and low mortgage rate, there's no distress. So we're not going to see any kind of real estate crash anytime soon, absent other things. So the takeaway is that things are very challenging market. However, so we'll have to say, so the takeaway, low inventory and housing prices will continue to go up, albeit slightly. So that's how it goes. Very challenging market indeed. If you receive value on this video, please smash the like button and subscribe to my YouTube channel, and also subscribe your email into our newsletter so you see our investing newsletter for members so you can learn more about real estate investing within our. Thank you so much. This is Seewing. Have a nice day. Bye-bye.